Good morning. Welcome to Stock Market Today. It's Thursday, October 10th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where you can get daily stock ideas for you to consider in your inbox every trading day before the market opened. So U.S. equities finished higher in Wednesday's trading, ending just off the best levels of the day. Tech, energy, and materials outperformed, although all sectors did close higher. Treasuries were weaker across the curve. The dollar was stronger against the yen, but weaker on the euro cross. Gold closed up 60 basis points, and WTI crude was down 10 basis points, reversing earlier gains and closed lower for an 11th time in the past 12 sessions. And as we get to the desk this morning, futures are pointing to a slightly lower open, although that kind of betrays a lot of the volatility that was seen in the futures market overnight. European markets were generally lower following a mixed session of trade in Asia. Treasuries are mixed with a bit of curve steepening. The dollar is weaker on the euro. Little changed against the yen. Gold up 10 basis points, and WTI crude is up 80 basis points, trading near the best levels of the morning. For the S&P 500, I guess the only way to describe it is to say the two-way volatility continues in October. Right, a lot of back and forth in and around near-term trade headlines. I think it's important to focus on the key levels. And right now, support is at the 200-day moving average near 28.48. And then, more importantly, the August lows around 28.20. I think if those August lows give way, that would complete a double top pattern here. Obviously, we would need to see the lows break before actually confirming that pattern is in place. But to me, 28.20 is the key level. To the upside, resistance is in that area between 29.50 and 3,000. That remains unchanged for the past few days. RSI is holding in bullish ranges for now, closing at 45.05 yesterday. So still holding the lower bound of bullish ranges. But I will note that Chaikin money flow did dip into a bearish reading ever so slightly in yesterday's trading. So call it a mixed bag for the indicators, but so far the S&P 500 is holding above that key support level at the August lows. Mark 2020 on your charts. To me, that's the key level to watch. Our market in a minute now. What we're writing about in our note to Chaikin Analytics clients today, there's no two ways about it. Trade hopes are driving stocks in the near term. Yesterday, trade hopes drove stocks higher on the day. Overnight, some commentary around trade caused the futures to actually trade down by more than 1% at one point in time overnight. So a lot of volatility in and around trade. However, yesterday, all sectors advanced on the day. We're going to take a look at breadth metrics today because they continue to favor support holding at those August lows. And it's interesting to me that we are starting to see some signs of value exhibit relative strength. We'll take a look at what that means a little bit later in the show. As I said, futures do point to a lower open here today. Taking a look at the power bars for the major market indexes here in the U.S., a little bit of a better stance today than yesterday, but still mostly skewed to the bearish side of the coin. Dow adds 66 basis points. 2 bulls to 6 bears. S&P 500, 90 basis points to the good, 74 bulls, 108 bears. NASDAQ, slight outperformer, 14 to 22 bulls to bears on that metric. Small caps were higher, but note that they did underperform once again. Their power bar ratio is still skewed bullish. However, 453 bulls, 411 bears. Bonds downtick, sending yields slightly higher. Technology had a nice day of outperformance yesterday, up nearly 1.5%. Thank you, TSMC. But still, from a power bar perspective, 6 bullish or very bullish stocks for 15 bearish or very bearish stocks in the technology sector. According to the Chaikin Power Bar, small cap stocks remain more bullish than large cap stocks, but in the major markets across the board are mixed. Looking at our stock of the day now, auto-generated by our algorithm based on the Chaikin Power Gauge rating. It's Assurant Inc. Comes to us from the insurance industry group. That's one where we have been table pounding bulls and do remain bullish. Actually been getting a lot of questions on this name. Ticker symbol AIZ closed at 124.80 yesterday, up 1.2% on the day. So some nice outperformance. That Power Gauge rating is very bullish due to very positive expert activity, attractive financial metrics, strong price volume activity as well. 20 factors, 5 in each of these categories give us that very bullish rating. Is this the type of stock we want to consider owning? I would say yes, because it's a very bullish stock, strong trend, strong industry group, and the market and model are in agreement. Look at the intensity of the outperformance here, right? Strong industry group and a strong stock within that industry group. Persistently bullish Chaikin money flow. Stock is above a rising long-term trend line, even as it consolidates here between 120 and 125. And we have our overbought, oversold indicator moving higher from an oversold position. This is pretty much the process and the setup that we look for. I've actually been getting a lot of questions on this stock. As I said, I think it does look compelling here within this consolidation after a solid move higher, right? If I take the weight of the evidence approach, I think you want to pay attention to a name like Assurant, ticker symbol AIZ, looks pretty compelling to me today as a bullish idea. Add AIZ to your list today. Sector tracker. Movement of the major sectors over the last 5 days, and what an about face, right? Past couple of days, they've been all red. Now we have mostly green across the board, led by technology, which is important because, as you've heard me say numerous times here, tech is the largest sector weighting in the S&P 500. So for the market to do well, we really want to see tech doing well, and it is over the past 5 days. After that, we still have that defensive feel, REITs and staples. Comms have some offense and defense in the mix. Middle of the road, healthcare, utes, and discretionary. And then at the bottom of the list now, financials, industrials, energy, and materials. Keep an eye on financials here because the 10-year yield is close to support at the 1.5 level. If the 10-year yield can hold that support zone and start to move higher, that could be a tailwind for the banks. Early days, obviously not calling a change of trend just yet, but keep an eye on the 10-year because if it does hold support at 1.5 and begin to move higher, we could potentially start to see some outperformance by the banks within the financials. So keep an eye on that. Energy and materials still near the bottom of the list. Our industry in focus today, biotech services. And I always say with biotechs and small drug companies, you really have to know what you own when you're looking at the individual stocks. Be aware of what's coming down the pipe in terms of key catalysts, whether it's announcements on a drug trial, whether it's drug launches, whether there are PDUFA dates. These are catalysts that could move these stocks 30, 40, 50% in a day, and you need to be aware of them if you are going to invest in biotech. That being said, group has been pretty bearish here, right? Over the past 6 months, it's underperformed the S&P 500 by over 10%. Power bar ratio, which as we always say measures future potential, 63 bearish or very bearish stocks for only 8 bullish or very bullish stocks, earns it a rank of number 20 of the 21 subsectors that we track. So some of the indicative names there with very bearish ratings: Blueprint Medical, BPMC, RA Pharma, RARX, and Biohaven, BHVN, all with very bearish Chaikin power gauge ratings. And if we look at the ETF, the XBI, you can see here, it's a pretty bearish setup. Very bearish Chaikin power gauge ETF rating and a weak trend as the fund trades below a declining long-term trend line. I've drawn you some key support levels that have recently broken, and the fund does remain below them. Notice the underperformance in place since April, and the intensity of that underperformance is picking up of late. At the same time, we have some intensely bearish Chaikin money flow readings for this fund. Now, the fund is oversold in the near term based on our indicator, but for all intents and purposes, if we're running through the process at the ETF level, XBI looks like a fund that we want to avoid. I understand that there are individual stories at the holdings level. If you're going to take a look at them, as I said earlier, just be aware, know what the key catalysts that are coming down the pipe are, because they really could impact the stock in a big way in either direction. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. DOE inventory data helped Hess move higher by about 3.6% on the day. Keys, KEYS, up 3.5%. Nothing really company specific on that name. Nectar, remember Nectar was a big loser in the previous session, up over 3.2% yesterday. A bit of a rebound following the downgrade that stock received. Edward Life Sciences, EW, nothing company specific there, but that stock was higher by 3.11% yesterday. Additionally, AMAT moved higher some positive takeaways from Samsung's reports and some positive comments from Nanya. Sent AMAT higher on the day. Keep an eye on the memory names here, folks. Names like AMAT, names like Micron. Some positive commentary coming out of this space. On the loser side of the board, L Brands, ticker LB, down nearly 3%. Nothing company specific there. It was a mixed bag throughout retail and consumer land yesterday. Mattel down 2.75%. Again, no company specific news there, but on an up day for the market, we had Mattel down 2.75%. Notice the very bearish rating. Johnson & Johnson down nearly 2% as they are going to have to pay $8 billion in a lawsuit. News hits the tape yesterday morning before the open. Johnny John down nearly 2%. Cabot, COG, a bearish name in the energy complex, down 2%. And EVRG, nothing company specific to drive that stock lower by nearly 2% on the day. So on Thursdays, I look at market breadth, try to get a gauge of what's going on under the hood of the equity market. I look at a few different breadth indicators, right? I think it's important to see when the indicators line up and connect the dots on the data points. So let's look at them here. The advanced decline line for the S&P 500, holding above the July breakout level. And I think that that is important as the market has pulled back here a bit and volatility has picked up. AD line still holding above that key breakout level after making new highs in September. Add to that the fact that the percentage of stocks in the S&P 500 currently trading above their respective 200-day moving averages is holding above the 50% mark. I think 50% is important. If you break below 50%, that tends to turn into a dicey situation for the market. So far, we are holding above that 50% level. At the same time, we want to look at a little bit of a shorter term measure of breadth, and the percentage of stocks above their 50-day moving averages is holding above the 30% mark. So for the percentage of stocks above their 200-day, 50 becomes a key level. For the percentage of stocks above their 50-day moving averages, I think 30 becomes a key level. And so far, the fact that we are holding above 50% for the 200 days, 30% for the 50 days, and the advanced decline line is holding above that breakout level, that increases the odds that the S&P 500 is going to hold those August lows, which I told you earlier are really important, right? We're taking a weight of the evidence approach, right? So breadth still looks like support will hold. And when we add that to the sentiment readings that we looked at yesterday, sentiment still skewed towards the bearish sign. To me, if it just kind of increases the odds that important support at the August lows is likely to hold. I said that we're seeing signs of relative life in value stocks, and here's what I'm talking about. What we're looking at here is the Spider S&P 500 Value ETF, and what we can see is a steady uptrend off of the late 2018 lows. The fund is above a rising 200-day moving average. It is also above an uptrend line off of these June lows. After breaking out from the August consolidation, it has pulled back and held support at that breakout level. And what's important to me is that these pullbacks that hold support are not producing oversold conditions for the RSI. So this tells me that there is some upside momentum to the move higher here on an absolute basis for value. We'll also note that it did actually exceed and trade to new highs recently. But for us, what's really also important is the fact that it is breaking a downtrend line relative to the S&P 500. So some signs of life in value stocks, at least on the larger side of the cap spectrum. Take a look at SPYV, and we'll see if that can persist. Finally, we'll end it with a stock idea. I'm highlighting Owens Corning in my note today. OC breakout, retest above the 50-day, above the 200-day moving average. RSI holding in bullish ranges, and the stock is an outperformer. So that's going to wrap it up for today. I'll be back here tomorrow.